fellas wanted to start the show early. They wanted Alex chimed in with, I'm not doing turkey this year. A very declarative statement as we talk about Thanksgiving, Stockman's Market Lovers. Just almost a week before Thanksgiving here 2021, as we welcome you to another excursion into the cathedral of finance. Wipe your feet, Zach, before you step into the cathedral.
I forgot on the mat out there.
Yeah, you got to wipe your feet before you step into the cathedral of finance. Yeah. And so anyway, we are sans. Well, we've got Danny here, but Danny is kind of here in spirit. Danny is out pepper hunting. He's in a spice.
Empty chair.
Yeah, he is spice rubbing it. He's out there hunting. It's spice rub season now officially. Zach,
yeah,
we've talked about it.
I saw.
Yeah,
in the back office. I saw a mysterious box with a big label on the
he's
side.
Big,
yeah.
Oh, he's amped up the packaging this year. There's an official. I don't want to give it away for people. So here's the thing: people do actually. This is no joke. They love Danny's rub.
It's good.
Yeah, they like his spice rub.
Gave me a couple of them. Yeah.
So now he's amped up the labeling.
Yeah.
And I mean, he's all in. I mean, he's always been into it, but now it's like really serious. I saw the labels in the back room too. Danny is out now in the Texas Amazonian jungles.
Oh yeah.
Getting just the final touches to make the master mix, which will then go in the packaging, which will then be sent out to Stockton's Market Lovers. And listen, if you like, it's not a hot rub. It's a smoky rub, I believe.
Yeah, it's not too spicy.
No, not too spicy at all. If you want some, listen, Danny, whether you're a client, not a client, a friend of the show, if you somehow you found yourself roped into listening to this and you're not a friend of the show and you're like, I'd like some spice rub, Dan at Revere Asset, 855-732-5932. He will be happy to send you some. He loves sharing that spice rub. That is no joke.
Yes.
And then we joked around that when Danny wasn't here the next time, we'd have Meryl come in and give us all the Danny secrets.
Right. She spilled the Danny tea.
Well, here's the thing. I don't think Meryl would enjoy that.
No.
But I will share this with you. So 2 weeks ago, I was saving it for this show because I knew Danny wouldn't be here. So I walk in, right? And Meryl had her head down. She's at the front desk.
Yeah.
And she had her head down. And she looks up. She goes, "Oh, it's you." And I'm like, "Hi, Meryl." And she's like, "What do you do? Oh, you guys are taping the show." She goes, "I thought it was Danny, but you're dressed too nice and you're not yelling."
She didn't. Did she actually say that?
I swear to you, I swear to you on all that's holy rub that she looked up and said, "You're dressed nice and you're not yelling." And here, Danny's not a yeller. I don't want to give the impression that Danny's barking out, yelling things. Danny is just loud. Don, at what that's a small way of putting it. Danny, Don, at what decibel level does Danny sneeze?
Well, he's like it's the equivalent of Spinal Tap speakers. They go to 11. That's Danny's sneeze.
Danny sneezes.
I would
Texas.
like to have seen the reaction on Meryl's face the first time she experienced that.
I you know what? I got to ask her because when Danny sneezes, this is no joke. Don can hear him in Jacksonville. It's ridiculous.
Yeah,
and his hair lifts 6 inches off of his scalp and then settles back down.
Yeah, it's got to be. It's cartoonish. Like, it's so incredible.
That guy.
The Danny sneeze is like the equivalent of an Acme hammer falling from a cliff. Like, it's just...
No joke.
Yeah. I wish we could I tape it like we got to tape it once.
He's the guy like at a restaurant you'd hear sneeze and everybody turns like, whoa.
And then when you call him out on it, he just is like, "That's how I've always sneezed."
Yeah.
Yeah. Well, people used to just they used to pee and poop out in a canal, but then we got indoor plumbing.
Yeah. Well, that's true.
I've pointed that out once, and he did not like that analogy.
Didn't run with that.
Oh,
huh?
did not like it. But look, we got a lot to talk about, Stock Nerds and Market Lovers. So Danny's gone, and I always try to give you like the best show because I feel like I usually lean on Danny just for content and the monologue. But I've got something here. I got two things, and I want to lead the show, but then we'll get to the fellas. So Casper Mattress, Zach, you know Casper Mattress? Like
they got a store over. Yeah.
So Casper Mattress it went IPO.
Okay.
So, by the way, fellas, Hunter and Alex.
What's the quote?
What's the quote?
For the IPO?
Yeah.
It IPO'd last year.
Oh.
Yeah. It IPO'd last year.
Yeah.
But where I'm going to go with it.
SPR.
Yeah. Where I'm going to go
right?
with this,
Yeah.
it's going private. It's just, it is one of the worst things to come public.
Oh, really?
Yeah. It's like it is. It's like the Ford Pinto, one of the worst things to come public, and in a long time, right? New Coke was one of the worst things to come public. Yeah. So it goes Ford Pinto, New Coke. That toy from Saturday Night Live, broken glass in a bag, the Christmas gift.
Yeah. Okay. Yeah.
and then Casper mattress, and so it's real interesting though. So Casper mattress is going to go private. And just let me read this here for you, and then it's going to lead me into my very next thing that I think you can find. There's a way to avoid these type of stocks, like factually, and it's going to I think it'll help you. It'll help stock nerds, market lovers, traders, investors get into some of the best stocks possible when I finish up this segment here. So just real quick, Casper mattress. This week, the mattress and a box maker agreed to be taken private in a transaction that values Casper at less than $300 million, about half what it was worth when it went public nearly 2 years ago. Casper had been, listen to this. So there's a big gulf, GULF, between $300 million and what it had been valued at in early 2019. Privately at $1.1 billion. And that's really interesting. I want to point that out because I think you're going to see more Caspers here. Okay? Companies that they're known brands, highly touted, highly valued privately. But once you introduce liquidity, meaning the markets, you find out the true value of what it's worth, right?
Yeah.
And so let me just show you this. This is the only real show note. Did anyone make money on this? And so you can read. I don't want to read this whole thing to stock nerds, but there's only really one person, like one group here that I could find that made money on it, and that's the people that led the seed round. And so they had a total of $6 million into it, and that stake's now worth $9 million, whereas everybody else is kind of. I think losing their shirts is a little strong. I don't believe that's the case, but not the best thing ever, right? And so, and the true numbers here, you're relying on people to tell you if these are the true numbers, right? Like you can find them on Crunchbase and that kind of thing, but whether they're true or not. So it got me thinking about Casper, And so the same day that Casper, what day was this that I was? Yeah, Wednesday. So the same day Casper says it's going to go private. By the way, up 89% this week. Yeah, that's how bad the stock is. We'll pull the chart here in a second. But the same day Casper decides it's going to go private or be taken private, Target reports. Target reported earnings. Oh. The store, Target, right?
Target, love them.
Target. And I'm listening, and I was with the kids, I don't remember where I was, but I was listening to it either on the news or on the radio somewhere. And they said the margin number. Like what they made in the quarter on margin.
Oh.
You can imagine that Apple supposedly has very high margins on their iPhone, right?
Mm-hmm.
Right. And you've heard that retail is low margin. Like if you go grocery shopping, the margins are really thin.
Yes.
Now Target has not done poorly this year at all, but the number that was espoused it was a blowout quarter. Like it was, year over year sales.
Really?
Like everybody is going to Target. Like, what are we doing today, kids? We're going to Target. Based on the number of sales, same store sales are up, and they raised guidance. But their margins, Zach, for the quarter were 6%.
Feels pretty good.
No,
that's bad.
No.
Well, what do I know about running a store? Yeah,
6%. 6.
Yeah.
Like to give you an example, when you put an app into the apposphere. Well, and it doesn't matter if it's on Apple or Google Play.
Right.
It doesn't matter where it is. The standard was set by Apple years ago. They're going to take a 30% cut.
Yes.
So their margin, they did nothing, right, except provide this platform.
Yes.
So their margin is closely, once it's up and running now, it's just replicating, keeping the service up. It's about 30%. Okay. Target's margins.
A physical store.
A physical
tangible
store.
place.
Well,
yes.
it costs money.
Right.
And people By the way, speaking of money and people,
Yeah.
there was an alert that came over my phone.
Oh, no.
And I was about to share it with the fellas, but it doesn't help them make or save money, right? I try to limit the things I send to them
Yeah.
that I don't think are, I don't send the joke. I don't send the Michael Scott joke of the day to anybody.
You're good contact, yeah.
Yeah, so I almost sent this to them. I got an alert, and it literally was nothing but spin. So I subscribe to Apple News, so I get all these different things. And the alert was, senior citizens are going back into the workforce, and that's a good thing. And
I saw the same thing.
Oh, did you? That's
alarming.
My
It
first
said
thought,
unretiring.
unretiring, and my first thought was,
Yes.
I'm so glad you saw that, brother. My first thought was, holy effing hell!
Oh my God.
There's no way they're going back because they can't afford to live.
Yeah.
And that's a good thing.
And that's a good
that's
thing.
a good thing.
And you're going to like it.
Come on.
Gas, like natural gas, up tremendously. Like I was just talking to my dad this morning. We were in anthracite. Well, Don's up in the Northeast right now. It's anthracite coal region up there. And we actually used to heat our house with coal. It was cheap and expensive and really toasty.
That's right.
And so, but he switched when oil got really cheap from coal to oil.
Yeah.
Just easier. Like we used to
House
shovel-
have a coal bin?
We honest to God, we would shovel coal. We'd get like tons of coal dropped in the driveway. My brother and I would shovel it in 5-gallon buckets, take it down, and we'd stack like a gazillion. Oh yeah, you'd have to stoke the fire twice a day, heated the whole house. You never.
All
never
the older houses have a dedicated room in the basement.
Yep.
The coal bin that has
Really?
a window that slides open, and the coal truck would come with
No
a big
coal.
chute, and it would
It's-
slide it down.
it-
And
dusty
of course,
as
that
all
all
get
changed
out.
in the 80s.
You know,
Yeah.
Yep.
we got an old summer house up in Michigan, and that basement's got a real weird layout. I should ask my folks. That
Yeah.
might be exactly what's going on
Yeah,
down there.
so
Yeah,
we
it
used to have
be
we had wood for a few years,
Yeah.
but like wood would like just too much work.
Yeah.
Coal though, twice a day.
twice a day.
Twice a day. You
Burn
stoke
all
the fire
day.
twice a day, burn day. And so then he switched to oil when oil was really cheap. Everything. People are going to be just priced out. There's a reason why people are unretiring. They can't afford it.
Yeah.
That's another story, though. So it got me thinking back to where I was about Target, physical store.
6% margins.
Yeah, and the people like it, and it's everything, right? But the real big one here is the people. They are paying. We talked about this the other week. Starbucks $23, $25 an hour.
Yeah, it's going up. Yeah.
An hour.
15 to 23 starting? Yeah, like good lord.
And they're going to pass that on. Like there's only so much. And so it got me thinking, I bet you we can isolate something to help stock nerds and market lovers on this show around margin. I'm going to do it right now.
Okay.
And so going to be a lot of heads down. Don't mean to be heads down, but normally when I'm heads down and I'm flying, Danny would fill in with the voids here. But here's the thing. So one number in isolation doesn't make a stock, okay? Mm-hmm. And there is no absolute, this number says this. And look, there's always exceptions to the rule. But I think this is a real general rule because what stymies a lot of folks when it comes to investing is choice. The choice is paralyzing. For a lot of people, you line up 6 different variants of salad dressing or mayonnaise or whatever. That's why brands, like when you have a brand, you know what when your brand loyal does? You know what it does psychologically? It limits your choice.
Oh, it's for sure does.
Yeah, and so you're like, so you don't have that trouble. Steve Jobs dressed the same way, so like he didn't waste brain cells thinking about what he was going to wear,
No,
right?
There's a turtleneck and jeans every day.
Exactly.
Yeah,
and so like choice takes up time, choice takes up space. So mentally,
It's agonizing.
yeah, and for some people, depending. Now you're like Tim. You talk salad dressings, but other things are a bigger deal.
Sure.
Like anyone, it's open enrollment right now for healthcare plans. How's those choices treating you?
Sure.
Because you don't know what those plans entail.
Right.
And is it really health insurance if the deductible's $27,000?
That's a good point.
Yeah, we can talk about that till the cows come home. So. It's really just catastrophic at that. Anyway, I digress. I don't want to get into a healthcare debate.
No, yeah.
So with myself, I don't want to get into a healthcare debate with me.
Shadowboxing.
No one else is doing it to me but me.
Swinging at windmills here in the studio.
Yes,
Yeah.
that's all. I'm creating straw men.
That's right.
No, that's actually not a straw man. That's actually a legitimate thing. Yeah. So here we go. So, but margin. And I'm thinking, well, quarterly margin's too short, right? Like there's an argument out there that we should eliminate in this country quarterly earnings. I think Don and I and Danny have had this discussion before.
Quarterly earnings?
Yeah, like earnings come out quarterly. Every quarter, a company reports its earnings. Mm-hmm. And there's a movement out there, it's very small, that says we should just do annual.
Okay.
So Don, I think Don is pro quarterly, and I'm not disagreeing with him here when I think he may. Yeah. Don, give me the pro.
I'm pro monthly.
Oh, Don, give me the pro monthly. Yeah. Give me the pro monthly.
The more information an investor can have about the performance of a company, the more accurate price will be. There's a lot that happens from quarter to quarter, and sometimes these earnings reactions are amazing that you can report virtually the same numbers one quarter, drop 20%, put the same numbers up the next quarter, and you're up 20%. I would have no problem with some sort of a scaled back monthly report, and you actually see that from in a same store sales perspective in retail.
If they choose, but that's not required. Autos, they have to choose.
Not
to
required. It's expected by Wall Street, or you're not providing enough visibility, and your stock will pay the price.
When you're big enough, Costco stopped doing it. One of the big ones stopped reporting monthly same store. I don't think it's Costco. It's one of them, and they're so big. Like who cares?
Huh. Does that have to do with accrual versus cash accounting? Like they could have accounts receivable that isn't paid yet, and then it doesn't follow through, so that's why they have to do it.
Doesn't. I see Don's point, and I don't disagree with it. But I also see the people that advocate for just annual. Like instead of worrying about the monthly numbers, you're free to go grow your business. And so now, granted, that's assuming that everyone's working hard at growing the business and not having this awful like it'd be awful like if you invested in like let's just pull up CSPR, CSPR. Did I get that right?
Casper, right?
Yeah, there we go.
Yeah.
And it's on a weekly chart. And you can see that Casper is down. What is Casper down here? I can just do it real quick. Shanty style. I have it written in my notes, but we'll just do it here with you. 55% since its IPO, 56% roughly.
Market's too smart for a company to go public and then people buy it like that. It's just there's a reason why it's a penny stock.
I always think somebody knows, and so people probably knew. But I think I'm preparing stock nerds right now. I have done the research here, okay, and I'm going to tell you that the numbers that I get if I go to Market Watch. No, I want charts. Analyze, pardon me. So you can find margins in a number of different places. You can go to the fundamentals tab here in Analyze on a chart in Thinkorswim. I get mine from Investors Business Daily, and I use the annual number, okay? And so annual margin. And so I don't think quarterly is a good number to use. And I say that because it's too quick. I want to know as an aggregate what your margins are. And maybe that changes, right? Maybe I should switch to quarterly. Probably an argument to be made for there. But I want to just give you some stocks here, and we're going to run through some, okay? Yeah. And I've got them kind of grouped, okay? So I've got here, I'm going to do the group. So Casper went private, okay?
Yeah.
Now, I'm going to do the group of stocks I believe are the next round to go private because they're so awful. Right? Okay. People like train wrecks sell. Let's try, you know what? Let's figure out how to work stocks, train wrecks. You got to see this into the title for YouTube.
Stocks, train wrecks, you got to see this.
Yeah,
all right,
something like that.
That's good.
Yeah, with a picture of Danny, like we discussed earlier on the show.
Yeah, as previously discussed.
Yeah, as previously discussed. And maybe like a train in the background. I don't know.
That's right.
Figure it out.
Okay.
Yeah. Or you know what? Can we get one of those guys shoveling coal? Oh, shoveling money. The two fellas that shovel money. I'll get the art department going on that. Yeah, can you work on that?
Yes, absolutely.
So perfect.
Get the boys to laugh.
So here's the group of stocks I believe are about to go.
Our art department has Fridays off. Sorry.
Well, I mean, what are you going to do?
So the group of stocks, I'm going to give you their ticker, then I'm going to give you their margin, and then I'm going to give you how much they're down for the year. Okay?
All right.
Or up. Or up. Let's not assume
Yeah.
that I just gave away the surprise.
No.
But then I'm going to give you another group of stocks in another sector, and then I'm going to give you I'm going to do this 3 sets, okay?
Okay.
I thought people could handle 3 sets, and then I've got a couple of outliers.
All right.
Now remember, stock nerds and market lovers, if you own these stocks, now I feel impressed that you think I'm talking to you. I'm not talking to you. I love you. I'm talking to you, but these stocks are just things I literally came up with the last several days while driving, okay? It has nothing to do with anybody. If you own them, great. If not, great again, okay? And so let's take a journey here. And if anyone else has an idea when we're done here with a stock that's going to go private because it's so god-awful. Let's start off with PRPL. Let's stay in the mattress space, okay? Here is my charts are set to year to date. So let me there we go.
This was my next suggestion for you, Tim.
Hold on. Let me. I thought I had my chart set to year to date. Let me fix my charts here. Real simple to do. Go here. I have them at 20 years. Scroll up year to date. Now we are ready to rock and roll. So here's Purple Mattress. Purple Mattress's margins minus 14% annually, down for the year 62%. How about that dating site where we just bumble around? Okay, Bumble. Bumble is a technology company, really. 23%, minus 23%. They make minus 23% margin.
Wow.
It's not a physical product. Like Purple produces a physical product. Bumble produces you uploading your dating, whatever. I've never been on Bumble. I think Bumble is female only, I believe.
No, it's female.
Female CEO, I believe.
Yeah.
Oh, men are allowed on Bumble?
Yes, but
I believe
women.
so.
I think the difference is women initiate conversations on Bumble. On
Oh,
Tinder,
is that what it
you
is?
can message a woman and be like, "Hey, let's chat." On Bumble, I think they have to talk to you first. That's the angle. Yeah.
Okay.
For harassment or whatever. I don't know. I think dating. Whatever. What do I know about dating apps? Anyway.
Would you like to go down the rabbit hole?
No, I wouldn't.
Okay, fair enough.
Let's not.
I'm good. No,
You just
no
let
rabbit
me
hole
know how
needed.
deep you want to go on that,
Yeah.
down that ladder, and I am with you.
Absolutely.
That makes some good radio
Yeah,
content
I
right
know,
there.
yeah.
So Bumble, minus 23% annual margins, down 56% for the year. Palantir, PLTR. Palantir. Palantir is the secretive company helping the U.S. government uncover super duper bad guys.
Sounds like a supervillain company.
Well,
Palantir.
it's
What is
Stark
that?
Enterprises, right?
What do they do? I actually don't know. Like government
Advanced
contracts?
data analytics, manipulation, cybersecurity, military, government. They're all intertwined in a bunch
Stark
of stuff.
Industries.
A little bit. Yeah.
Right.
Yeah.
And so 8.2% plus 8.2% on their margins, minus 7.5% for the year. Oh, how about old Poshmark? We're going to sell our stuff on Poshmark, Zach. You and I, we're going to open up the old Zach sweater store.
That's right.
So plus 6 it's a marketplace. Plus 6.7% on the margins, minus 80% on the stock. Now I'm going to do these specifically back together here. SDC. All these, I believe, are the next candidates.
Oh, you read my mind. I was going to say Smile Direct.
They're so bad that it's cheaper to take them private than spend the money to publicly audit them. Like, it costs a lot of money every year to be a publicly traded company.
Yeah.
It costs a ton of money. It's cheaper to just get these things. Like, a lot of accountants are going to lose some really, I don't know what the accounting's like at Old Smile Direct Club, but minus, what is it? Oh my gosh, that's a big decimal. I think it's minus 41% margin. I might be wrong there, but I've got a little pencil mark there. Stock is down 71%. Do you see a trend? Like, negative margin, not so great stock performance. Oh, Tim, but you didn't do a line. A line is in the same category as Smile Direct Club, and that's my favorite stock, Tim. You better do a line. Well, I'd like to. 20.4% margins, okay? And the stock's up 30% for the year. What I'm trying to get to, stock nerds, market lovers, the better the margins, the better chance you have. And so I believe this to be true in good markets like we're in right now with what S&P's up 25 and NASDAQ up 25%. And what's the Dow up, like 17, 18%, something like that. You know, whether it's a good market or a bad market, you give yourself a fighting chance with margin. There's a lot of other factors that give the stock the propensity to propel higher, be it institutional support, be it quarterly sales, annual sales. But margins is something that I really think you can isolate at home. And if it's negative, maybe you just stay away. Well, Tim, does that mean the stock's not going up? No, stock could go up with negative margins. Absolutely. Could be the biggest winner of the year. But what are you looking for, stock nerds? That needle in a haystack? Or are you looking for consistency? And I'm looking for consistency. But listen, there are home run hitters out there, and it's attractive. I get it. Like Hunter, did you see the report? I only saw it because I was scrolling through Twitter and I saw Ravel's tweet about parlays and how New Jersey has taken in $1 gazillion in betting. And they're keeping sport books are keeping most of it because most of the money bet is parlays. And parlays have it's insane.
Yeah, well, it's not reflected in Pin and DraftKings stock charts at the moment.
Gosh darn it! Will somebody pull their operating margins for me, please? Seriously, I failed to do that. But you save it for a second. So we talked
margins. The operating profit margin on draft. That's AMD. My bad.
That's why. As a graduate student at the Connecticut School of Broadcasting, that's why I said keep it for a second. Yeah. Sit on it.
I'm sorry.
Yeah, that's all right.
We'll come back to this.
Listen, Target 6.5%. Okay, so not stellar, right? 6.5% annualized. No. It's up 43% for the year. Target is kicking butt and taking names. Walmart, though, interesting, is half of Target. So Walmart is 3.7% margin, only up. Oh, no, excuse me, it's down like 0.84%. Oh, Tim, you're not doing the best retailer in the world. Amazon, ironically, is 6.3%, up 13.5% for the year.
Almost in lockstep with Target.
Yeah, Kroger.
Is that just Amazon's sales? It's retail, or is that including all of their business?
It's everything. Yeah, that's why I use the IBD number.
Oh my God! Yeah, all right.
That's why I use the IBD number.
Because there's a massive divergence between their web services margins and their retail margins.
1,000%. Yeah. And I use the combined. I mean, that I don't. Yeah, I agree with you, Don. I had a couple other thoughts, but I don't think they're relevant. Well, they're relevant, but they're not worth me sharing. Censoring myself.
Hey, Tim, I got a quick question. On TOS, are you looking at the gross profit margin, operating profit, or net profit?
That's the thing. I don't use TOS's information. And I use IBDs. I trust IBDs. And it's one
pre-tax or just regular margin?
Pre-tax.
Okay.
I use their annual pre-tax margin. And it's a number that IBD readily, I know it's readily kept, and I trust it. And I've been using it for years. Procter & Gamble is interesting here. So I was like, well, I'll do a supermarket because supermarket margins are super low. By the way, Kroger 2.7% and up 9% for the year. Well, who supplies the supermarkets, right?
Right.
Procter & Gamble. 23% pre-tax margins, annual pre-tax margins, up 7% for the year. And then I was like, well, let me do, because coffee, right? I was curious about Bros. Bros is new. 2% margins, right? And I actually don't have the number here for Bros up for the year. What is Bros for the year? Give me a second. I'll do it with you shanty style here. It's up. 46%?
50% or so.
Yeah.
Yeah.
And then, but I was like, well, let me throw in Starbucks here. So Starbucks is up 13% for the year. Operating margins way better right now than Bros. And I'll be curious to see how that develops over time. 7.4% operating margins. Pre-tax operating margins, 7.4%. They're paying, and that's interesting too, because Starbucks and Target are like in the same ballpark, and they had to pay a bunch of people, and they produce a physical product that's handed to you. And by the way, if we just, I've got a few more here to go over. We are in the golden age, though, of shopping. And it dawned on me. So I had the family truckster out with the kids. Mm-hmm. And I pulled up to Target. I'm one of the people putting money in the Target. And so
Target's nice.
yeah, I like Target. Yeah. And so going to Target, and I'm like, all the spots were taken, right? And I've got one of the kids telling me unequivocally, I got to go to the bathroom.
It's time.
I'm like, what am I doing here? And Remy's got short legs, right? Like he can run super fast.
Sure.
But it's a parking lot. It's dangerous. Can't have him run. Like, what am I going to do?
Yeah.
Then I realize the best parking spots of any store are the ones for drive-up pickup.
Yeah.
I'm taking that. I'm getting close to
But
the store.
You're not picking up. You're dropping off.
I am going to my kid has got to make a drop-off right now.
Yeah.
And so I take the spot, and I'm thinking, this is amazing. Like where we're at in 2021.
Yes.
Like how Neiman Marcus, Nordstrom's, like your upper crust luxury retailers, right? They used to pride themselves, oh, I have a personal shopper. Now in 2021, Target, you tell them, you go get that,
Yeah.
and then they bring it out to you.
Yeah.
Like it is amazing. Like when you go through a Target, sometimes you'll see more people personal shopping is what they're doing. The personal shopping aspect, it's amazing what technology has done to democratize. Mm-hmm. And I never thought of Amazon as personal shopping, but that's what it is.
Fundamentally, yeah.
And here we are in 2021. Like people are like, I thought in the future we'd have flying cars. No. Everybody has access to personal shopping.
Yeah.
It's amazing.
Just the other day, I was at Kroger and they had an ad up, help wanted. Everybody's hiring.
Yeah.
They were looking for, in this order, sackers,
Yep.
cashiers, e-commerce, and then next to it, it was like instant cart shoppers and then management. I was like, good Lord, like just right in the middle there.
Yeah,
Like,
it's astounding to me. And I'm doing this margin because I'm about to tell you, I don't know how sustainable that is.
Yeah.
But Target has figured it out to get 6.5% margins in their category compared to Walmart, compared to Amazon, compared to Kroger, compared to other physical retailers like a Bros or an S-Bucks, right?
Yeah.
And it's interesting to me. And then I'm like, well, let's do like something that just came off of a strike, like John Deere.
Yeah.
And so John Deere, 10.9% margins. It's up a little over 31% for the year. Okay. But then we hit the granddaddy of them all, tech. Let's do technology.
Let's do tech.
And there's a reason why that like these companies are so, when people say, this company's book to value it's not in my parameters. Or they'll say, at a gazillion times sales, Tim, I can't in my heart want to buy this company. And the world doesn't care.
Yeah.
It doesn't, it just simply doesn't care. When you are a technology company, it is thought that all your resources go into the development and then you hit copy and copy and copy. And the costs are incremental to what it costs you to develop the one and then get it out to the masses. And that's why forward earnings are valued so tremendously more than, say, a Target or a Kroger or a Starbucks. Okay?
Right.
So let me run through a couple of these with you, and it's fascinating to me. And if I, like this, the CEO, and I forgot his name right now, but the leadership at some of these companies is absolutely positively tremendous. So, that's not it. ADB. Did I get this dyslexic again? There's Adobe. 20. Oh, it's beautiful, right? 20% margins, up 30% for the year. It's actually only outpacing the Nasdaq by like 5 or 6%. And then I'm like, well, what's Apple, right? Because Apple's got, they've got increased costs this year, and so Apple 30% margins, 29.9%, up 22% for the year. Look at this one, and I want to tell you something. The guy who's running Satya Nadella, really good CEO.
You hearing about Microsoft?
Yeah.
They're doing something over there.
Man, Microsoft, 42% margins. Microsoft is up 59% for the year. There is some magic in margins, man.
It sure is.
And it doesn't mean that you have these great margins. You can be poorly run. And I look, Tim, well, you're cherry picking. Look, I can't do every stock. There's exceptions to rules. So, but I think if you feel like you're overwhelmed or you're screening or you're like the IPO club, there's a lot of IPOs. Like, what if we isolated margin in IPOs? Like, well, Tim, do they have that number? Well, Bros has a number. Bros is a recent study. Yeah. And so you can start to find like, okay, I'm just going to avoid this merchandise, because what happens is FOMO, the fear of missing out. Shiny, bright object, right? Shoots up. And the thing is, if you have your rules and you're just consistently grinding out, making money, you're okay to let a whole bunch of everything go and you don't care. But like when you're inconsistent and you're haphazard and you're just flapping in the breeze, you know, like you're just flapping in the breeze and you're catching every lightning bolt that comes down from the stock gods. Man, you can't catch them all. It's like that donkey in Donkey Kong, a gorilla, right? He's just throwing barrels at Mario, right? You can't catch them all.
Right.
Google, 23.6% margins, up 73% for the year. And then the last one I'll do here, and I'm curious if someone get me the IBD number on Chipotle, please, while I do Tesla. I'm curious. I haven't done Chipotle. I wish I would have done Chipotle. Tesla here, 9.2%. So they're producing a car. They employ a ton of people and solar panels. 9.2% operating pre-tax margins.
Chipotle's around 12%, 10%.
Oh, awesome. Okay, and then up 52% for the year. Lucid didn't have
Best ones I've seen are NVIDIA. NVIDIA has got some of the best pre-tax margins.
Man, I wish I would have done that. I did Nikola. Hold on, NK. I did Nikola as just like, what is that number? Minus 21,843%. Like it's something stupid, and it's down 26% for the year. And then we've already done the Casper number. But let's put on Chipotle here. I'm curious. 10 or 12%. They've got a bunch of labor costs. Hey, will you pull me Costco too, now that I'm thinking about it, please? Somebody.
Costco is like 3%.
Oh, really? That's interesting. 35% for the year.
Home Depot is a good one. That's 15%.
Oh, okay. So here's this chart of Costco. So that's not as great a margin. I mean, this is going to be just astronomically high. Let me see if I can scrunch it up and keep it on the chart. I mean, this is just an amazing looking chart, right? Let's see. Shanty up 40%, 41% for the year. And then the last one we'll do here is Home Depot before I turn it over to the fellas.
Yeah, that's been an awesome stock.
And what's the margins on Home Depot?
15%.
Wow. 15%?
Yeah.
That is kick butt. Wow.
They knocked it out. This past earnings report was very impressive.
That's up 55% for the year.
Tim.
Yeah, you read my mind, bro.
For comparison.
Yeah. What is Lowe's margin?
It looks like recently closer to the 15% range, but earlier in the year, much lower, closer to 6, 7, 8%. So annual, it's probably going to be about 10, I would imagine.
Wow, they're a lot. They're doing twice the market this year. That is fascinating. Those margins at 15% for a retailer? Holy heck. That's why I like the show. That's some interesting stuff right there. That Costco chart's off. That Costco is a great looking chart. So that's a great example. Like Costco is coming in at Kroger margins. Much, 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 much different result. Crazy. So anyway, I thought that was so interesting because I think if you're like, I'm starting to think I'm already in 2022 in my mind. And like, what are some things that I can help people do to isolate? Like, hey man, I'm busy. Like I get so the IPO club, if you want an IPO club, it's just people that take the content that Hunter, Alex, Don, we talk about here on the show. They just take it and they run with it. It's just an offshoot of what we do. It's just a group of people that get together on Zoom, and they're not on the Zoom meeting. They can be if they want to, but they usually just share charts and they share thoughts. This is the international sign for sharing thoughts because you type. And they're just good people. Like they're not snotty, not snide, not crass. Just awesome human beings looking to get better, taking the content that we talk about, and they just have other people now to talk about it with when we're not with them at night, doing the videos and doing podcasts. By the way, Zach, the podcast is interesting to me here. The podcast numbers have gone up dramatically is not. They've gone up significantly.
Yeah.
On the audio side.
Thanks for listening, gang.
Right. And I thought like once we introduced video, people would just migrate to video. And as it turns out, that's really not yet anyway. It's not the case. And and like the number of audio have increased, and number of video is just like, Like, and there's a couple ways they can watch it too. So whether it's YouTube or through Vimeo, or through their
website.
Website. Yeah, there's multiple ways to get it, but the audio is just trucking, and I find that all interesting. So anyway, I think if you have a resolution, like what are the things you want to look at? I just think that isolating margin in your screening might help you stay more focused on stocks with great potential. And this is that time of year where people start doing, well, what's it up year to date? Okay, give me NVIDIA. You guys got me curious. I wish I would have done NVIDIA.
Yeah, NVIDIA's been knocking over like 45% quarterly pre-tax margins.
What's the annual? Does anyone?
About the same. It's
about the same.
All 4 quarters pretty close to 45. Yeah.
Oh, okay. This is going to be just, 144%. Fantastic. I could do this all day. Like I'm fascinated by what the margins are. Like when I started, I had to stop myself like with that list because what are the margins and what is the result? What are the margins? What are the result? And that's got to be, and there's a number of ways you can get good margins, right? You can slash workforce, you could innovate. There's a number of ways you could do it. And I think the ones that innovate, treat their people well, are the ones that win out at the end of the day, or treat their customers well. Probably a combination of both. So with that, I thought that was a good way to deliver value.
Yeah.
On a Danny, something you can sink your teeth into right now, stock nerds, market lovers, and continuing with the red meat while Danny finds the precise pepper balance.
That's right.
Because it's not just one pepper.
No.
It's never just one pepper.
No,
Danny is out in the fields right now. Like, do you ever see Juan Valdez picking coffee in the fields? Like, it's not just one coffee field.
Yeah.
Danny is on his donkey, burro. Danny is on his burro right now. Let me paint a mental image of you of Danny right now. Danny has got the Indiana Jones hat on. He's got a rope. He's on a donkey. And he's in the pepper fields right now. And he's getting the right blend, and he's taking a little bit of paprika too, and he's gonna make a master spice blend that's gonna rival the Colonel's. Colonel only has 12 spices.
It's finger licking good.
Yeah, the Colonel only has 12 things in there. Danny's out there tweaking. He's the Colonel. If we can be honest, rests on his laurels. Like, hey Colonel, why don't you update this? Why don't you do what Danny does every year out there, getting things at their peak of freshness, and then making a spice blend that's going to make you go, oh my gosh, Danny tastes great. And so
it's lip smacking great, Tim.
I heard Danny got an endorsement deal this year for the spice rub from Macho Man Randy Savage.
Oh yeah,
yeah. Don, do you have that clip?
Oh, yeah. Has anybody ever had meat that's just bland? You gotta put some Danny Spice Rub on it.
Nobody likes bland meat. That was an alternative tagline to Danny Spice Rub. Don't eat bland meat.
Yeah.
But I forget what we went with Danny's Spice. Don't eat tan meat.
Something like that.
The color tan is bland.
No earthy tones.
No earthy toned meat.
No.
Not with Danny.
No.
Okay, with that, stock nerds, market lovers, let's transition to Hunter. There's somebody who's going to write to me. You don't have to do the jokes, Tim. You can just get right to Hunter and Alex.
Right. You have to be funny, Tim. All right.
You don't feel the need to. Yeah, don't feel the need to interject humor, Tim. Just get right to the young guys.
Taking a stab at comedy.
Like they got their pencil sharp and like, Hunter said this. Yeah. Come on, Hunter, give it to me.
I love this.
Oh man. Well, Tim, I actually think that study with the margins is very interesting, and I think there's one key, huge macro picture that's driving a lot of what we just looked at on the charts, and that is obviously those companies with the bigger margins have bigger cushion towards their profitability. Yep. And when is that most valuable? When input costs are rising, when inflation is prevalent, which is now. Mm-hmm. So companies with 3, 4, 5, 6% margins can't withstand it like a NVIDIA. Even AMD's have about 24%. It's not the same as NVIDIA in regards to being able to weather those types of storms. So I think you're seeing those companies that are having a really tough time with it, punished, like Casper, for example, Purple, whatever the case may be. And companies like NVIDIA, Apple, rewarded for their ability to withstand kind of the storm of inflation, for lack of a better term. So with that being said, Tim, I've got an interesting little group of securities I want to talk about today. Oils, banks and financials, and cryptocurrency. So will you start with XOP, Tim?
Sure. It's
and I'm going to be
on your screen, but go ahead. Let's do XOP.
Yeah. So what I want to highlight here is obviously these don't look the best. You can look at, the holdings of XOP. I've got a few of them here we're going to look at, but XOP is the oil and gas exploration ETF. It's typically a pretty good bit more volatile than XLE. So just keep that in mind. But we've seen a pretty sharp pullback to the 50-day moving average on both of these, Tim. So I was going to look at both of them. Yesterday, we kind of bounced off of it. Not the strongest, but we got a little bit of a bounce off the 50. Today, we sliced right through it on the back of some COVID resurgence news, whatever the case may be. I think it's important. Tim, will you pull up Matador as well, MTDR, and then FANG? So Matador and FANG, two of the leaders in this space, both on their 50-day, pretty much verbatim right on it at the moment. And this is the first test of the 50-day for XOP, for XLE, for FANG, for Matador, since it broke out, since it had that huge run. So I think this is a really important spot to watch these names. XOP, really that 100 level is extremely important. But given that small caps are right back at the previous pivot, if you pull up IWM, Tim, as well, you really, if oil and gas continues to plummet in the way that it has the last couple of days, that's going to be a real damper to IWM being able to continue its move. So what I'm looking at is either continued weakness in these names as a big red flag potentially for small caps or maybe just for oils. But I'm looking for a possible reversal, a hammer, something of those sorts to show that these are oversold and maybe see IWM get back above the 21 as well. So in the same breath, Tim, will you pull up XLF for me, please? Mm-hmm. And XLF is doing a little bit of what I'm talking about. So you can see if you pull up or zoom in a little bit, you can see it's at the top of the range. XLF was down, I believe, about 2% at one point today, but back at the top of the range and back above the 50. That's the kind of candle I'm looking to see on XOP, XLE, some of these names. We just have not seen it yet. And another thing to highlight here, just as the day has gone on, I didn't plan on talking about this, but I've noticed that the financials have come back much better in a lot of spots than the oil and gas has as the day has progressed. Now that may end up, equaling out by the end of the day. I don't know, but I just noticed a lot of the financials had come back off their lows better than a lot of the oil. So two very important areas to small caps. We know banks and financials and oils tend to be very impactful to the Russell 2000s movement. So two very important sectors at very crucial levels, considering where IWM is. So I think those are important to watch. Those are some good names. As far as banks to watch, SIVB and WAL. WAL is actually right here on the 50-day for the first time. SIVB has held up a little bit better. So WAL, a pretty similar look to like what we saw with Matador. A big move out, a breakout, now testing the 50 for the first time. So that is oil and gas and banks and how it relates to small caps. Like I said, I think that's important. Watch what those two sectors and small caps do over the next week. It could be pretty imperative for the market. Secondly, I've got some cryptocurrency comparisons for you, Tim. So will you first pull up coin for me? So this is a holding in Grotection. You can see it is up today. Bitcoin has been floundering / pulling back really over the last couple of weeks. So coin has held up pretty much at the 21, is now reclaiming the 21 today. Tim, will you also pull up SI? Mm-hmm. Similar story, held up at the 21, big time strength today. So SI and coin, two of the best looking Bitcoin or cryptocurrency proxies that you can get. Now, Tim, will you also pull up MARA? You can see this did not hold up at the 21. This had a nearly 50% pullback in a matter of about 6 days from the high, while coin had about a 5%, 6% pullback in that same time frame. Pull up HUT as well, Tim, HUT. So a similar story from 1650 down to like 12. So the big point here is HUT and MARA did not hold up at the 21. Coin and SI did. So there's the Bitcoin miners, particularly these two, are very speculative, very volatile. So keep that in mind when you're looking at these. But the evidence is kind of showing us that maybe SI, Coin are healthier, have more support, and don't experience such awful velocity to the downside like we saw with MARA, like we've seen with HUT. So SI and Coin looking like two of the strongest ways to get exposure to the crypto market, acting better than their peers in that regard. So I thought that was an interesting divergence. Bitcoin currently a little bit under the 21-day moving average, Ethereum as well, but they have come back a little bit. Look for Bitcoin to get back above 60K. I think that would be a positive sign. So I know that was kind of a lot, but that's really all I got, Tim.
Awesome. I love that. Alex, what you got, buddy?
Yeah. So you brought up Dutch Brothers before. I just want to go over something real quick. I had gotten stopped out. I only took an 8% or 5% profit in my account. But the thing is I may be early, and this kind of reminds me earlier in the year when I was really bullish on Roblox, and Roblox came up and then it washed back down, and then now it's finally breaking out. These things take time, these IPOs. So don't give up on them. Keep them on your watch list. The reason why I'm so bullish on Bros is the fundamentals. I haven't seen an IPO come out like this in a long time where the EPS estimates, the pre-tax margins, sales, everything's lining up. The story's there. But price action is the name of the game. So right now I'm out. And if it reconfirms back up, I will buy it back. You have to. That's why we have stop losses, right? You don't hold on and just let the account keep dripping and bleeding your hard-earned money. That was just a little review there. So the things I'm looking at today, I'm still following this home builder theme. Kind of lines up with what you were talking about with margins. So like if you look at Toll Brothers, which I do own in my tracking portfolio, this one's been a great name as well as DHI and the ITB, that ETF, which is the home builders ETF. I think that regardless of what's going on in inflation, they're going to knock it out. So let's say it costs them more money to build a home. It doesn't matter because the demand is so high still and housing prices are still skyrocketing. So those margins it's kind of like a wash on the increase on the inflation for the cost of let's say the wood, the materials, the nails, the nuts, everything that you would need to build a home, pipes, PVC pipes, whatever it is. Obviously we're seeing that in the price action. It looks pretty good. And so I've been following that. Another sector that's standing out to me is the retail. If you can pull up Dick's Sporting Goods, DKS. I bought this yesterday in the tracking portfolio. This looks like a cup base to me. That gap, it's back above that gap on the left side back in August.
Sorry.
It does have earnings coming up, so just a full disclosure, I don't have at least an 8% gain. I will sell into the earnings. I don't hold without a profit cushion. That's gambling, and I will sell that day before if it doesn't give me enough cushion. But I do like the sector. Another one is Under Armour. That gapped up weeks ago, and it's coming back into new highs. Macy's gapped up this week on explosive volume. This looks like a tech stock, and so the retail, they're knocking it out. I don't know, like clothes are more expensive and stuff, so I don't think people care. They're just spending money like it's I wouldn't have never expected Macy's to be performing like this. I thought they were done because everyone was saying it too. I'm not the only one that thought this because of Amazon and online shopping. Maybe their exposure to online, I haven't gone to their website, but it just reminds me of like a store you actually go to in person, but they seem to be doing well. The last one I want to look at is actually a SaaS company, software as a service company. It's Unity Software. We had bought today in Grotection off the 8 exponential moving average. It bounced and confirmed. It's confirming a little bit higher off that low today. Well, this has been a leader this last month, and there's a wall of buyers. You can see on the bottom that he's got those volume bars up, all those green big bars. That's pretty significant push to the upside. We'll see if this handles out and continues higher. That metaverse theme is really caught a lot of people's eyes right now. Roblox is also in that theme. But Unity Software, the thing that's different with them, they don't just do gaming, they also do architecture platforms, building. For, let's say someone wants to design a bridge for a civil engineer, they can build that platform and allow the builder or whoever, someone that's buying the property or the city, to see that in an animated view, 3D, and has that platform. And it's called an engine. So Unity Software, if you're thinking about it, it's not a gaming company. They build the engine and the platform for the gaming companies to build their games on. So they're kind of, if you were to think of it, I'm trying to think of an example to make it easily a better understanding of. So imagine you have a farm. There are the seeds in the farm to build the corn. I guess that's the best way I can describe it if you were to visualize it. So this engine that they have, it separates. There's no one else doing that. So this is the story. I'm really big on understanding the company that we buy or that I buy, and researching it as much as I can to know, because it builds that conviction. I've always talked about that. Like, it helps so in the down days you don't sell so quickly and get shaken out, but you just have to follow your stops. And regardless of how you feel, like I did, I was really bullish on Dutch Brothers. I ended up selling because it hit my max stop, my line in the sand. That's pretty much it today. Those are the themes, home builders, retail, Unity Software, and then a little bit of a review on something like Dutch Brothers.
Awesome. Okay, we go to Don. Don, by the way, Stockner's Market Lovers. So 5 nights a week, Hunter, Alex, Don, myself, we do videos. We send them to you. They're 10, 20 minutes, and they're nothing but stocks. This podcast, obviously, a little bit different, a little bit deeper dive, a little bit more research for you. Want to get this in your inbox. Don't want to just find it on YouTube. Subscribe. Send us your email. We'll never spam you. All we do is send out our videos and the podcast link. You can find Daily Market Insight. There's where all the podcasts live. And then Don does a video on Friday nights. It's the 21 over 21, the dirty 30 if necessary, and he gives you all the research in the world that you could want to get your next week started. So with that, Don, where do you want to go? Take it away.
I've been getting a lot of positive feedback lately on something I've been including in the videos, which is the key levels on the S&P 500 and how we track them, and if they break through various levels, either to the upside or to the downside, the approach, how we will change our approach to either how long or how invested we are in the market, how we would cut some exposure if we were to break through the 21 day moving average, for example, or various support levels along the way. So be sure and check that out. That'll be included in Friday's video. Going to be a handful of changes in the 21 over 21 list this week. There's been quite a few recent leaders have lost their leadership status, but we've had others just to step in and take their place. Some things that we've gotten stopped out on over the last 2 weeks have just continued lower. Some other things that we've been fortunate enough to get good buy points into, just marching higher. We did some offensive selling on Roblox when it just got ridiculously expensive, extended 30% above the 21-day exponential moving average yesterday. So took some of that off and moved some of that into Unity this morning, as those are the two major software plays in the metaverse right now, and you're going to be hearing that word constantly. Heard somebody describing the NVIDIA conference call after they reported earnings this week, and they're actually looking at a subscription model for their AR and AI offerings to different companies. And that would just increase their margins also. Subscriptions, whether you're doing it for a million people or 1,100,000 people, there's not a whole lot of difference. You're just producing the content and licensing it to people. Your revenues go up, but the actual amount of work that you have to do to provide that. Very different for a retailer versus selling 1 million of something versus 1,100,000 of something. You've got no inventory that you have to worry about when you're a software company. So that's why they're so their margins are so big, and they get such a big multiple on Wall Street. So tune in Friday. The Dirty 30, I haven't touched on that very often, but I think I will touch on it briefly tonight. And there's a couple of lessons in there. The Dirty 30 is like over 90 stocks now, and about half of them are still over 50% off of their highs from February, March, April. And the lesson there is the leaders of the previous cycle, usually there is about 50% turnover. Don't hold on to a stock just because you think it has a big story. IBD studies show that big leaders correct on average 72% from their highs once they top. And the Dirty 30 is just putting that into some actual numbers and proof that, get out of the way of what's not working and stick with what is. And that's really the number one rule of our investment philosophy in-house here. So check Friday night for the big show video that I'll be doing, and we get ready for a thin but historically positive Thanksgiving week in the market.
All right, I've got.
Hey Tim.
Yo, what's up?
I've got a one last thing, a very quick thing that goes in tandem with what Alex and Don said. I just dug this up. I have an old research spreadsheet where I have a bunch of information on various companies, but Unity is in there. And so I thought I'd just put some color to this with a little bit of real-time research from their website, right off their website. So Unity software is the creation and operation software for gaming, real-time 3D for auto, transport, manufacturing, film, animations. They have a cinematics platform, immersive 3D software for.
Did I just lose?
For architects.
Nope. Okay.
Is to make software for creating and operating real-time 3D content. Very diversified in markets, partners, and revenue streams. So that is what I have in here on Unity software.
Very nice. Interesting. All right. Is that it? I've got one last thing, but what we used to ask on the range.
That is it for me.
Shooting rifles. Any last rounds or saved alibis?
Funny.
Let's see here. So it's super interesting. I pointed this out in the video Wednesday, but I want to just cover it one more time because this has not been the relationship, and it's changed. I don't know if it's changed for good or not, but the market has advanced, technology especially, and good earnings are trumping this relationship. That's why I like to say there's no absolutes. The dollar has marched forward, and stocks like Nvidia, they haven't cared, and the dollar has been trumping a lot of things this year. Super interesting too. Markets doing just fine today. Dollar up 0.5%, and I get my thought is that if the dollar just goes on some kind of blow off top, it probably catches up to markets eventually, but it doesn't care right now. And that's why I think it's so important that I was having a talk with somebody over chat this week. There's the person's thoughts, comments were, isn't it something that the market just moves on and there's a lot of bad news out there, right? Inflation, people on retiring, and so on, or political strife, and that's why. And my response was, and he was in agreement too. That's why we just focus on setups. You just focus on what's happening in front of you and not. I think macro is interesting. I don't think I do believe that, but if you are market's going to hell because dollar's going higher here, you missed a move. And so I think just focusing on what the setups are is so imperative. And it'll be interesting to see what the dollar does here, because if the dollar gets up to 96, 98. No, excuse me, 97, 98. I think it's going to have an effect, but we'll see. That's just my thought. You got.
It has negatively impacted commodities while it's been running over the last 8 days. Oil, the base metals, the precious metals have suffered, which is typical of the correlation.
And so it'll be super interesting to see how this progresses now, and And oh, stock nerd tip, but bonus, one last thing, right?
Oh, go on.
Stock nerd wrote to me and she says, "Hey, you mentioned as an aside last week that Americans are more in debt than ever," and it was one of those things like I don't know if that matters. Like that's how we're consumers, right? Like we're always in debt. Like look at our government leading by example, right? And so I guess, and she said her son, I believe, is in credit cleanup. That's a thing. Credit. I think I have this right. Like he goes in, like if you have bad credit, he repairs your credit. I'm not sure how that's done, but he repairs your credit. And she said he's like their company that he works at and himself have never been busier trying to repair people's credit.
Oh,
and I don't. It's just anecdotal, but it'll be really interesting to see what transpires here in the next, I would say, 24 to 36 months. What is AFRM? AFRM. What is AFRM? It's a firm, and it's. I mean, I'm curious. Like, does all this eventually collapse on itself? I mean, a firm is because look at. By the way, if Pete Peloton is a firm's biggest customer, and oh yeah, like so all those
that could have been on your list for going private.
Oh my gosh, man! I feel like I missed an opportunity there. You're right. Like it's interesting because I don't know if it still is. I would reckon Amazon's going to be a firm's biggest customer.
Yeah, I would. That's what I would think is that old. And I think from a firm's last earnings report, the Amazon partnership is exclusive through 2023, if I'm not mistaken. So
something like that.
I would assume that'll switch pretty quickly. I would hope. Anyway.
Yeah, like but if this was your biggest customer, and and they're doing this because, as it turns out, as some people refer to it, it's a bicycle with an iPad attached to it. Yeah. Like, where's all this going? Are there any other public companies that do what a firm does? I don't think Klarna is listed here.
Not in the same capacity.
Yeah, that's why it's tough. It's tough to get a gauge.
Tim, this is I brought this up to the guys the other morning. Pull up GPN, Global Payment Systems, I think, Global Payment something.
Yeah, here it is.
This thing, I mean, I know Don brought this up, that the rise of a firm and some of a lot of the Visa, the MasterCards, a lot of those names have been getting crushed. This is look at a weekly on this one, or even monthly, and look at how this one acted, from 2000 to really up until this recent sell-off. It was a pretty good acting stock, but something is going on in the payment industry. It looks like money's flowing out of these big behemoths that were those compounders, the Visas, the MasterCards, even this GPN, and things are kind of getting shaken up, it appears, with the upstarts, the Affirms. I mean, I know Upstart is personal loans, but it seems that there's something going on with these names. We'll see if they come back. But that was just another one I'd ran across that had just a brutal year. I mean, down. What is it down? What is GPN down year to date, Tim? I know it's kind of random here, but
no, give me a second. I'll totally find out for you. Let me see. Let me get it on the right time frame. So
looks like about 40%, 50% year to date.
Yeah, that's crazy. 41. So,
wow.
Yeah, and I eventually this is all just like anything. If you get underwater too much, eventually it all catches up. I just don't. But a firm also limits you. Like I believe it's like with Shopify, a firm just they'll give you $1,000. Like that's the credit limit. Now there's other players coming into the space that are for home improvement, same model as a firm, but now you're talking tens of thousands of dollars for bigger purchases, right? Because a firm doesn't run your credit. Like a firm's just saying, hey, you want to buy it? Let's buy it, and let's split up the payments. I just don't know what's the penalty if you don't pay.
It goes against your credit score later. They can report you to collections after if you don't pay.
Yeah, and I wonder if people are more
later on. But yes, you're right. They don't run credit off.
Because at first you have to qualify for a quote unquote credit card. You don't have to do any qualifications for like an Affirm type service, and that's the dynamic change. That's the shift, and so it's democratized finance where I wonder, like, if you talk about retail doing well, like now there's a whole new group that maybe didn't have access to credit. Doesn't mean they're going to be delinquent. I'm not saying that, but there's a group of people out there that have access to purchase things on credit, and that's not necessarily.
We've seen how historically that turns out, though. It's not. I hate to be pessimistic, but I just don't think that's going to work out.
But if a firm is bundling it all and selling it to Wall Street, they get off the hook.
They get off the hook, right? Somebody's going to, and that's really if we're diving just a little bit deeper here for 1 second. That's really what happened to mortgages in 2008, where the banks were off, quote unquote, were off the hook because they were bundling them, or who won? Lehman Brothers. They didn't get off the hook. They were the sellers, and they couldn't offload it eventually. Securitization of the debt, and eventually someone's left holding the bag. It's just when that's going to be, if it ever is going to be. But you're right, Don. Like a firm, Klarna, they're bundling that, they're securitizing it, and most likely selling it to UBS or Credit Suisse, and then those two firms will just have a product that implodes. And well, that's what happened, right? With UBS.
I'm not arguing with you on that.
Yeah, like that's what's going to happen.
They'll sell it as bonds to companies and endowments that need to have an income producing portion in their portfolio, and that's who will be left holding the bag.
They're gonna sell it, Don, as a VIX product. They're gonna securitize it, sell it as a VIX. They're gonna make it a leveraged. They're gonna make it a leveraged 3 times ETF somehow. Sell it, disperse the risk amongst the masses with the gambling problem, and then before you know it, that's how the whole thing gets taken down.
Tim, so I googled
Speaking
this.
Of the gambling problem, it is mind-boggling what these gambling companies are offering out to get you to become a customer. Man, I've seen billboards, your first bet risk-free up to $2,000. If the Chiefs score any touchdown, you win $200.
Yeah.
They know what they can suck out of you once they lure you in and hook you.
I'll give you some insight here to that same model. So when I was at IBD, I partnered with 3 or 4 of the major brokerage firms, and one of them, I asked, "Hey, what is an account worth to you?" And because IBD at the time, I don't know if they still do, we had the highest publication cost, and but the data is still magnificent. The data is what you want. You want that information because it's pure. It can help you make a tremendous amount of money. And so what I did was I just broke it. I plain languaged it for people to actually be able to use the product. And I said, "What is this worth to you?" And the answer was like $400. If you get somebody to deposit money into an account, because of your newspaper, we'll pay for their subscription. I'm like, okay, that's that. I can make that happen. And we drove. I remember one year, just a bunch of at one of the major particular brokerages, just a ton of accounts, and they were so grateful because you could. They knew that once, like, if you're an active, like, they make the most money off the active traders. Now that, of course, has changed with a little bit of that model has changed with free trades and order flow, but for options traders, that has not changed. And those active traders and options are driving a ton of revenue. So I'll tell you what, with that, Danny will be back. We'll ask him how his trip was to the Amazonian jungles of Texas, finding the perfect peppers, get you an address that you can write to officially. We'll see how the blend is turned out. Maybe there'll be a blend tasting. You think there'll be a sampling next week? We
should do one on the show for sure.
Absolutely do one on the show.
Live reactions.
Yeah,
only the best for the fans.
That's what I'm saying. Well, speaking of that, I wanted to do. Don and I proposed that Danny we do a pepper eating contest but it'd just be Danny. I can see like the hottest pepper Danny could eat before his eyes popped. Yeah, he said no. Like this guy. He was really quick to turn that down.
That's a bummer.
Yeah. All right, stock nerds, we love you. Listen, questions, concerns, comments. Always write to us, 855-732-5932 if you want to talk. And with that, we'll see you next week on Your Money.